sell-off going on here, off 100 points. You can see off the lows of the session, but nonetheless, a bit of red on your screen. S&P trading down 0.6%. The Dow basically extending its losing streak 7 days in a row here, looking to close in the red. The Nasdaq and S&P also trading to the downside, well below the record levels we saw yesterday there on the Nasdaq. And it's all happening just as we await that big jobs report coming out on Friday. Analysts estimate that the U.S. economy added 175,000 jobs last month. That would be down from the 287 in June. Joining me right now with a look at these markets and what you need to be doing to protect yourself or maybe make some money, our own Liz MacDonald, along with Kaltbaum Capital Management President Gary Kaltbaum. Good to see both you guys. Gary, you've been a little worried about this market here. Now 7 days in a row and looking at this kind of downside, where we're heading.
Well, the last few weeks I turned bullish. Today gives me some worry. There's some things going on with Japanese and European bonds that have been rigged and manipulated by their country's central banks that got hit. And look, the big thing for me ultimately, earnings growth stinks, revenue growth stinks, economies around the globe are anemic at best. What you do have going for your central banks just continue to raise the bar on how much money they print and how low they take negative interest rates, but eventually there will be a day of reckoning when the market stops
eventually, but you got some room to run. In the meantime, Elizabeth MacDonald, you know, we've got a Fed that wanted to move this fall, that wanted to move rates higher. I don't think they can, given all the unfortunate economies around the world, and basically that would put us in a position where we had such a stronger dollar that it would become very difficult to export our goods into these declining economies.
Yeah, you know, that truly would be the black swan event if the Fed suddenly decided to raise rates in December. The futures market now saying a 1 in 3 chance. That has steadily been coming down that we'll see a Fed rate increase this year. So I think, though, that Gary Kaltbaum is right. You know, are we ringing the bell at the top? Does it look toppy? Yeah. You know, I'm always so astonished, not astonished, but just I have to laugh at, you know, Goldman Sachs saying, you know, go to cash for the next 3 months, right up to the U.S. election. They didn't say that, but that's essentially the message. You can't market time this market right now. You look for the Fort Knox balance sheets that are good dividend, you know, sweet growth stocks. You know, the way to look at it, though, again, to Gary's point, you know, the U.S. economy, we talked about the jobs report. The stock market is not a futures contract on the U.S. economy. It's impacted and affected by all sorts of things
You know, that's
a
very good point. You know, it used to be, though, that the two were a little bit more related, Gary. It felt like, you know, if the economy was heading straight into recession, you would see that potentially 6 to 9 months earlier reflected in the stock market. But recently, and perhaps it's because of Fed policy, we have increasingly become divorced from sort of economic fundamentals and what's really happening in the stock market. Is that just the new reality of the world in which we live, Gary?
It's been the new reality. Look, the central banks, not just here but around the globe, are running the markets right now. You have China buying up their equities, Japan buying up their equities. You have Europe now buying up their own corporate bonds in the billions and billions, and who knows what we're doing because we're not accountable.
How are we going to ever compete with that? I mean, do we go to negative interest rates at some point? We've got an aggressive Fed, you know it.
Well, think about this. We're supposedly in good shape, and we're still down at 0.25%, and we're still had printed $4.5 trillion. For me, it is just a race to the bottom, and I've been saying this for 3 years. We never, ever want to get to the point where they keep doing this and all of a sudden markets stop listening. If we ever get to that point,
and God forbid we actually do have a recession, Liz.
Yeah, it's a good point. And, you know, we are now tracking, I think, Fitch rating says 11 trillion plus in negative yielding bonds around the world where people are paying governments to save. So if the Fed does raise rates, that will rock the bond markets around the world as well. You see massive losses there happening.
Thank you so much, Liz and Gary. Good to see you guys. We're going to be right back with more intel after this. See you here. Don't